Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenivek on Bloomberg Radio.
It's almost like people are forgetting that
What?
we have company after company telling us they're concerned about tariffs and
It's interesting,
the
right?
outlook. Yeah, I want to see what Tony Roth has to say about it. He's Chief Investment Officer of Wilmington Trust. Tony joins us this afternoon from Radnor, Pennsylvania. Tony, a recession, yes or no, in the cards for this year?
Well, tell me what is going to happen with tariff policy, and I'll tell you whether we're going to have a recession. Right now, our forecast is 60% that we'll have a recession, and that's essentially probability weighting the fact that we may be getting to a point, we think we are getting to a point where we're past the point of no return with respect to pulling back on the tariffs. And
What does that mean? What does that mean? What does that mean?
Well, it means that even if they were to de-escalate now, there's been enough damage to supply chains, specifically with respect to China, and to the soft data, the consumer and the business confidence, that there's going to be a significant slowing in economic activity because of the tariffs and the uncertainty that have been released by the administration in their very poorly orchestrated efforts to achieve a very righteous goal, unfortunately. And consequently, we'd have a recession. I don't know that we're there yet, but we're pretty close.
Well, when is the point of no return?
Well, I would say certainly by Memorial Day, if there isn't a significant de-escalation. And I think the important way to, understand the environment is there's China and there's everybody else. And for right now, for everybody else, there's a 10% tariff in place. We can continue to trade with those countries. But with China, it's an effective embargo. And there are many respects in which that embargo will be existential for thousands, if not tens of thousands, of small businesses in America, and that will impact supply chains, will create even deeper levels of degradation in consumer confidence. And so, what the administration has done here is really reckless, I would have to say, the way that they've gone about this. If you care about the economy, if you don't care about the economy and you're just looking for some other goal, that's some type of long-term, national securities, other sets of values other than economic ones, then this could be the right thing to do. Well,
to be fair, I think President Trump has thought about tariffs for a long time, right? And many would argue that his reasoning, just to look at the other side, is that this is a way of getting investment in the United States, bring back some jobs, bring back a certain part of the economy, be it the manufacturing, that has really gone to the wayside over, 50, 60, 70, 80 years. Having said that, we are a service-led economy. And many would also say that that is the kind of economy you want to have. It's kind of, whether it's financial services and so on and so forth, maybe a more sophisticated economic economy. But I don't know. Do you think that ultimately this experiment potentially that the president is doing, that it could bring back a lot of investment to the United States and jobs and actually work?
No, I don't. Not the way he's going about it. In fact, I think that he's causing the exact opposite outcome as it relates to investment, as we're seeing a unpredictably weaker dollar in terms of how weak it may get. We're seeing deep concern around the foundational bedrock of our system being the U.S. Treasury security as a store of value. And so we're seeing a repulsive effect from a capital and investment formation standpoint. As it relates to manufacturing, the type of manufacturing that we want back in this country, which is high value semiconductors, pharmaceuticals, those are the kinds of things that can't come back in the time frame that the president is going to be in office. And they can start to come back over that period of time. but they can't actually really come back in that time. And so in order to create an environment where those types of flows will occur, he needs to create an incentive system where it's in the interest of companies to do that. Mm-hmm. And right now he's not doing that. He's trying to achieve he's a very cause and effect oriented guy, and he's trying to be the biggest cause and bully an effect that he wants to see. But companies won't abide by that because there's no underlying incentive for them to keep that manufacturing in place or even create it. In his 3.5 years left of his administration, he's got to create a structure, and I'm not sure that's a nuance that he grasps.
So what's an investor to do right now?
Well, I think that we're at what I would call this, and this is a term I heard by a guest on the TV channel, Bloomberg TV this morning. I don't remember who it was. This is the Wile E. Coyote moment, where the embargo on China is going to be so damaging to the economy that you see Besant today coming out and saying, well, this mutual embargo, it can't last in the very near term. You're going to see the de-escalation. Now, I have no idea what that means. But as I've described, we're at this moment now where if we don't have a very, very significant de-escalation with China within the next 30 days or so, but certainly by Memorial Day, we will be irrevocably into a recession. And then the question will be, how deep will the recession be? And so as an investor, I think that you have to stay tight to your long-term goals, and you have to essentially be ready if we get a pop in markets to de-risk if you don't believe that it's true, or you have to be ready to re-risk if we go down into the mid 4,000s, I think, where there's probably better opportunity. But right now we're sort of in this no man's land between this range of, call it 4,500 to 5,500, where we expect markets to sort of bump around now in a very volatile fashion until we get to a much more certain and less damaging position from a tariff standpoint. And by the way, they've grossly miscalculated, in our estimation, the leverage that they have with respect to China on multiple levels. China largely imports from us commodities they can get from anywhere in the world. Yeah. And we import from them very critical supply chain components that range from rare earth minerals to 90% of the plastic trays that our poultry sits on or our meat sits on. All comes from China.
No, you're right. The longer this goes on, I think COVID started to open up that window. We realized how much our supply chain came out of China, but rare earths were something Tim and I were just talking about on our broadcast. Hey, Tony, thank you so much. Tony Roth, Chief Investment Officer of Wilmington Trust, joining us from Radnor, Pennsylvania. Memorial Day, he says.
All right, clock is ticking.
That could be the point where there's kind of no going back in the impact on the economy, at least according to him.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Boeing selling portions of its digital aviation solutions business. It's a move, Tim, that's seen as helping the company really shore up its balance sheet.
With what you need to know about the sale and what it may mean for the company's outlook, we've got with us our LA bureau, from our LA bureau, Bloomberg News senior aerospace reporter Julie Johnson. Julie, good to see you. The unit that was sold, what exactly did it encompass?
Okay, Jepson is really considered one of Boeing's crown jewels. They produce navigation software and tools that are in the planes of just about, or cockpits of just about every plane on the planet. Really thought to be solidly profitable, and I think if these had been better times, Boeing would have wanted to hang on to Jepson. But right now, it's an amazing source of capital and safety cushion to get through these very turbulent times.
So it's shoring up its balance sheet essentially. I mean, you mentioned it's its crown jewel. Even in times that are challenging, why would Boeing part with a part of its business that is the crown jewel?
Well, it's not central to the, jet manufacturing or defense businesses that are really at the heart of Boeing. This is part of the, the profit machine that's been Boeing Global Services. So it'll be interesting to see how that unit does going forward without some of these digital assets. But I think Boeing is really sort of right now has the mindset, let's just stick to our knitting. And I think the CEO is trying to bring some sort of steady conservatism to how the company is managed. And they definitely need to pay down debt and keep their, cash stash at a healthy level.
Is it a smart, or is it seen to, Julie, as a smart fundamental play by those who follow this company? I get the idea of it being good for the balance sheet, but I'm wondering, is it just solely a balance sheet play, or is it, as you said, the relatively or newest CEO of Boeing, is on a mission to kind of define the company and stick to its core? So fundamentally, do folks think this is smart?
I think so. There were some analysts gnashing their teeth when this was first made public. And by the way, we had the scoop.
Congratulations.
Thank you. And I think we might have forced the company's hand last night, by the way. We had the scoop on the buyer, and they pushed out an announcement this morning. But anyway, enough congratulations and backpats.
Boeing says thanks, Julie. But go ahead.
I know the people who stayed up all night on that release are probably not loving us today. But anyway, it's Carol, that's such a smart question. I think under the circumstances, people, and especially given that the price is almost double what people were projecting, a few months ago. I mean, Boeing, so I think this is going to be seen as a good move, all in all. But I think definitely, there are people who wish Boeing had hung on to this. And one other thing that was tucked into the release, and hopefully there'll be more details on this, but I think Boeing struck a really unusual agreement with Thoma Bravo, the buyer, and they'll maintain some rights to some of the digital, some of the information flowing through the apps that are going. So I think they'll have a chance to study user data and intellectual property is valuable. And I think other buyers might not have been willing to give that to Boeing.
Julie, what other transactions do we need to have on our radar right now? The Spirit Aerosystems acquisition that happened over the summer. This Jeppesen one, this sale is happening now. Are there other parts of the business that are going to be shed? Or is Boeing going to look to bring anything else back under its umbrella?
So one real quick answer on that. I think, some of this is still TBD, but we're really interested to see what they do with space.
Okay.
And they've been very, circumspect when it comes to Starliner, which is the troubled spacecraft. Even as NASA has, charted out months of tests and, plans to maybe put the next capsule into the air. Boeing's not saying a whole lot. And so that's really interesting. And the SLS rocket, which is the massive and massively expensive rocket that was sort of the last echo of old space, and I think Musk would love to see that go away. So we're keeping a watch on space, and then but I think the company has sort of indicated that they're not doing a huge fire sale, which is what we'd sort of thought at the outset. I think they're just going to pick their spots. And maybe some businesses also get shut down. And can I just point out a weird, circle of life situation with Spirit? That was Boeing's largest divestiture at the time, and that was 2005, so 20 years ago. And I think I haven't had a chance to go, look at inflation-adjusted numbers, but I think this deal today eclipses the Spirit acquisition, and it will help finance Boeing bringing Spirit back into the fold.
Oh, okay.
You kind of need a little bit of a whiteboard, but I get it. But you're right. But it's like, they're trying to figure out their way forward, right? And the money that they maybe need to do it. And so it's kind of interesting to see the pieces being moved, if you will, by the new CEO, who we know, right? Investors are watching really closely to see where it all goes. And gosh, wait, does the company actually report earnings tomorrow?
Oh, yes.
So just in our last 30 seconds, top of mind, what's the numbers that you're going to be watching out for? Because it is before the market, so it'll be early.
She's going to have to stay up all night because she's in LA this
Boeing's
time.
like,
They're getting back on you,
Julie.
Julie.
Alarm. The number is 38, and that's 737 production. Let's see how close they get to that number.
Julie, thank you so much. Julie Johnson, she's Bloomberg News senior aerospace reporter.
This is the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's go back to California, though, and bring in Ross Gerber. He's president and CEO of Gerber Kawasaki Wealth and Investment Management. They manage about $3.4 billion. And according to the most recent filings, they have a stake in Tesla worth about $63 million. Ross joins us from Santa Monica. Ross, I want to go to threads that you sent earlier. You said, before the numbers came out, here's what you wrote. I've done Tesla calls for 11 years. This is the worst performance I've seen in Tesla's history. I get Elon will tell everyone about trillions of total addressable market and robots taking over the world. Anything to get you not to look at the facts.
The numbers are clear as day that automotive sales are down 20% and things aren't going well. And earnings are down substantially from the pace and cash flow from what it was doing over the last several years. But you can see it mostly with auto sales as well, just have plateaued and started moving lower. So there's a lot to be concerned about.
What's the narrative that would make you, I don't know, more upbeat about it? I mean, where are you? Because, we've talked with you where you love this company. There were times you were certainly concerned. You've owned cars. I'm assuming you still own some Teslas. You've owned stocks. You've added, you've sold. Okay, so you've got the Cybertruck. So where are you in terms of your view on Tesla, the company, and maybe on Elon as head of this company?
Well, I get in my Cybertruck and I'm kind of embarrassed. And fortunately, I live in Santa Monica where everybody else has a Tesla, so they can't throw rocks at me. But it's like people drive Teslas with their heads down because they're embarrassed by the fact they drive a Tesla because of Elon Musk. And that's how bad the brand value has declined over the last year. And so it's really sad to me. I love the company, and I personally believe climate change is one of the most important issues that we solve. I just survived the Palisades fire barely. And I can tell you, after looking at 60-foot flames a block from my house and almost destroying everything I own, that if you're not worried about climate change, you should be. And Tesla is the solution for so many of the issues that we can address, like EVs in cars, and then storage for utilities and creating energy through solar and wind. And so that's why it's hard for me to let go of Tesla, because I still think it's the best solution for an enormous problem. And people want to solve this problem, and people are buying EVs, but it's simply because of Elon that they don't want Tesla. And so I partially want to believe that if there's changes or better marketing or a different CEO or some way that the company can separate itself from the negativity that's created by Elon's actions, then Tesla maybe can recover and get customers again. But that hope is fading as the time goes on.
How much has your stake in Tesla shifted in terms of where it was a couple of years ago, how optimistic you were about the company versus the roughly $63 million that you have in the company right now? In other words, are you putting your money where your mouth is?
Yeah, we've been sellers, and you can look at our public filings. We've been sellers of Tesla for almost 3 years now. So since 21 at the high, we've been, on and off sellers when we have the opportunity, because we had so much stock. So it used to be, 10 to 12% of our overall assets. It grew so much for us during those days. 5 years ago was when it really started. And so 3 years ago when it peaked, over 3 years ago, it was really around the purchase of Twitter that we became pretty concerned. And then that got us to lower our stake. and then the divisive comments and anti-gay rhetoric, and then obviously turning into total right-wing MAGA got us extremely concerned about the damage to the brand, and we continued to lower our stake. So we've sold about 60% of our, at where we are at the high point with Tesla, we sold about 60% of our shares, and we're still active sellers of Tesla when we have the opportunity.
When would you become a buyer again?
Either by price, like if the price declines substantially to a valuation that makes sense for the company, so if it started trading at a reasonable multiple, which would be a substantial decline for Tesla, it could drop about 50% to get to just a reasonable multiple, then I think I would look at Tesla again. But it would also take a shift in strategy to trying to actually market and sell their products instead of turning off all the potential customers of the world. So that's a big issue. Until they actually want to sell a car, I don't see how Tesla gets better. But right now, they just want to talk about things they can't sell because they don't exist. But the products they have, they're doing everything possible to convince you not to buy them. And that's the problem I have.
Ross, I feel like for a long time, Tesla was the North Star when it comes to EVs in the United States. And everything that's happened over the last few years, and certainly Elon's involvement with the Trump campaign and White House, that has certainly changed things. But it's also the Trump White House and administration in terms of what they may do going forward or lack thereof when it comes to EVs. It's an interesting day where all of a sudden we saw maybe some help for the solar industry. So trying to get a handle on, I guess, what's coming out of the administration. At the same time, Tim and I are obsessed with what's coming out of China in terms of their advancement with EVs. How critical, as you look at things, yes, on a company basis, but bigger, broader, that this moment in time could be really crucial, whether it's for Tesla, but also the U.S. involvement in EVs going forward?
Yeah, you're kind of hitting this like really big issue that's about to happen, which is the fact that China is now building better EVs than anybody. And BYD in particular is really getting good at this. And they're making tons of low cost EVs. And we're in the midst of a trade war created by Trump, which if you kind of understand the way Chinese people think, they're going to stick with their brands now versus American brands. So if you're in China today, driving around in a Tesla with your iPhone isn't cool. And it used to be cool. And so Chinese consumers are going to, vote with their vote with their Chinese money, and they're going to buy Chinese products. So that's going to be a big problem for companies like Apple and Tesla, because it's just nationalism. Secondly, the competition's good now. In the old days, we used to say like Tesla has no competition, like there was nothing that could compare. But today, there's a lot of good EVs people can buy. So, Tesla does have competition, and I still think they make the best EVs, but, there's some good EVs. I have a Rivian. I love it. My business partner has a BMW EV. He loves it. We're seeing lots of happiness with lots of different EVs from customers. So,
here in the U.S., we don't see BYDs. We see a few Polestars. That's right. We don't see BYDs.
Thank God for Tesla, right?
Yeah, we see a lot of Teslas. But in Europe, in parts of Europe, in Mexico, in Australia. Yeah, a lot of these, you can find these Chinese EVs. How much of an issue is it for Tesla outside of the U.S., but not including China? So ex-U.S., ex-China, the competition from Chinese companies.
Well, a perfect antidote to this was I was just in Mexico City, and I was staying in a hotel across from the Tesla dealership, which is on the nicest street in Mexico City, which is like the Rodeo Drive, Beverly Hills of Mexico City. And a Tesla costs like $35,000 or $40,000 in Mexico, just like it does here. That is way, way, way too expensive for a traditional Mexican consumer, okay? There are BYDs everywhere. And why? People want to go electric in cities like Mexico City. It makes a lot of sense. But BYDs sell for $15,000. And so all the Ubers were BYDs that we took. Now, the BYD, it doesn't compare to the Tesla in quality in any way. But it's a cheap EV. It's perfect for the emerging markets. And I don't see how Tesla can compete because they really haven't made a car to compete in the emerging markets. And at this point, I think it's too late and they should just not deal with that market. I think they should stick with the markets that they're in and try to dominate those. But the low end EV market is going to be brutal, and BYD is going to be the winner.
Great stuff, as always, on Tesla, on Elon, and really the macro EV market. Ross, thank you so much. Take care. Ross Gerber, President and Chief Executive Officer of Gerber Kawasaki Wealth and Investment Management, joining us from Santa Monica.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.